just jumping onto the loans very, very quickly. Um, yes, look, this is not very common. There's definitely been an increase in this over the last 5 years, and this is where self-managed super fund will have lent money to someone else. Sort of mezzanine finance type stuff, loans to unrelated parties. They might know of a business, they need money, and I mean the sort of interest rates that they're getting are quite good. You can absolutely see, why these investments are being made. Now, as part of the audits work we do, we obviously need a loan agreement, and that's all fine. We may need to do some extra audit work on just to make sure that entity or individual you're lending to is not related. But bringing it back to the valuation thing, in my experience, most accountants will they'll look at the loan value and bang, that's it in the balance sheet. That might not be necessarily the case. I mean, we've had, and I guess this has happened over the last year or two, particularly with sort of property-related, mezzanine finances. There can be question marks about the recoverability, which feeds directly into the valuation. And now, previously, that has obviously been a Part A issue in terms of, do we qualify Part A? But the ATO's sort of logic is that, well, if you're not sure about what the value is on the balance sheet, well, then you haven't met the requirements of Reg 802B, like in terms of the valuations. And so that leads to a Part B qualification. So I guess the thing is, from an accountant's point of view, where you've got one of these, you may, you have to provide the financials of the entity. So we need something to have some gauge of the recoverability. If you don't, it can lead to a qualification. I guess just be mindful that we do, where you have this and there's a question mark about recovery, we come back to the accountant and say, look, you'll need to provide more information. So, okay, what else? So, now look, I guess just following on from these unlisted investments, particularly these big, widely held ones, where it is really problematic to get the information, to meet the ATO's requirements. And I actually think, just from looking at our client base over the last 12 months, I honestly think that half of them, just not out of any mischief, but just because of the nature of the investment, the lack of information from the investment manager, all these factors, because of that, half of them just cannot meet these expectations of the ATO. And like I said, I feel awful doing it, but it basically means, it will be a breach or a qualification of Part B. If it's material, it will mean a contravention report to the ATO. And like I said, we hate doing it, but the rules are quite clear. And I guess, as accountants, what can you do? And there's no ability for your clients to do anything to get it over the line. There's, typically, in pretty much all instances, they've got no real connection to the investment manager. They're individual investors. There might be 50 or 100 others. There's got no sway, and so they're going to basically. I think you just have to accept it, that they're, and you have to educate your client, and we are, looking at putting together not so much an article, but just a fact sheet that can be given to your clients to explain that, look, yes, you've got this qualification, you haven't done anything bad, in terms of, but this investment does not meet the requirements of the SIS Act, and now, what will the ATO do? I don't know. In some instances, well, generally what we have seen is they don't do much at all, but they get quite annoyed if we as auditors don't actually tell them about this. So, yeah, I like I said, I think that there are some firms that have a high concentration of these types of investments, and all I can say is, yeah, you just need to sort of educate your clients. Unfortunately, I mean, it might change. The ATO might ease off in some way, but I just can't see it happening. So, so that's basically it. Just be mindful that whether it's property, unlisted unit trust, or whatever it is, if or loans that sort of we can't establish, if we don't get it over the line, there'll have to be a contravention report, and again, I feel really bad about it, because it hasn't come about because of bad behavior by the trustee. It's just the nature of the investment, the inability to get that objective and supportive information. So yeah, Okay, I think that's all I'll talk about with the valuations. Again, I'd say, look, the big takeaway is, if you're not sure about a specific investment or what you can do, please reach out to us. It's very much a little bespoke kind of thing. Every investment is different.